March 22nd, 2024, we had a bear channel over the past day or two. This whole thing, this was all one big channel. When you get a channel, what is a logical target, or just any sort of spike? What is a logical target for a pullback? About 50%. So you can see here we got a 50% pullback of the bear channel. And that's pretty normal. This on a higher time frame is a spike. So it's a breakout. If you looked at like a 30-minute chart, I'll pull one up. It's going to be some sort of spike. Um, see like that, not as clear, but you can still see 50% pullback, pretty obvious. So 50% pullbacks are very common in the market. They're probably the most common pullback that there is. We got a failed breakout of the 18 bar range as well. There was a lot of reasons why there was profit taking up here. When you get a failed breakout of the 18 bar range and then a reversal bar of the opposite, so a failed breakout to the downside and a reversal bar up, the market oftentimes tries to break out of the other side of the 18 bar range like it did today. You can see. And so the high of the day was going to be a possible area for profit taking because of that. It was also a measured move up of this range, which was around the high of the day, and the 50% pullback. So there was a lot of magnets up here, and there's a lot of reasons for profit taking. You can see I have some examples of breakouts of 18 bar ranges. Obviously, these are Al stats, not mine, but he's smart and they work. So failed breakout, 18 bar range. See, 18 bar range is made here. Failed breakout, reversal down, test the other side. 18 bar range is created here. Failed breakout, and it took a while, but we ended up testing the other side. 18 bar range, failed breakout. This time the reversal failed. Failed breakout of the 18 bar range, bear bar, sell it, big reversal. So pretty common. Bar one, big bear doji bar, not really worth doing anything. You're at the bottom of a bear channel. Usually bear channels are bull flags, so you're probably more looking to buy coming into this day than you are looking to sell. The bears, and if you're going to sell on this day, it should be rather obvious. The bears should be getting something pretty convincing. Inside bar two, potential high one for the bulls, but really not that good. I think just better to wait. You can see traders have been selling the moving average for a while. We had closes above it here, but not all that strong. So bulls waiting to get a full body above the moving average. That's really important to them before they get a reversal up. You can see we got the body fully above the moving average, and then we ended up getting a reversal. Bar three, big outside down, failed breakout of the one high, and then a failed breakout of the one low. So just trading range behavior. Follow through for the bears on bar four, but really not all that great. If you sell below three, are you that ecstatic about four? Not really. You wanted four to be, a huge bar, something like this. You wanted four to just be a huge, massive bear bar, and you really didn't end up getting it. So a lot of traders end up exiting at the market, and that's creating bar five. If you look, we tested the highs of bull bars all day. Look at the high of bar two. So none of them were great buys, but the point is traders knew it was a trading range. So they knew logically they could probably buy above any relatively reasonable bull bar, and it was going to come back to their entry price if they scaled in. So they bought the two high. They scaled in. They made money. Let's say you bought the seven high. It took a while, but you scaled in and you made money over here. That's why there was selling over here. That's what was creating that. Even the 12 high, you bought the 12 high. You got trapped. You didn't buy above it. You bought the 12 high. Look what happened. You scaled in. You made money. So it happened pretty much all day today. And all the points that we hit, you can see even the 10 high. If you bought the highest possible tick and you scaled in, look, those traders made money. And then you can see there's selling pressure whenever we hit one of these targets. 12 high, selling pressure. This high, selling pressure. That high, selling pressure. This high, selling. So there's clearly traders who are using that as a strategy. You can see it. They can't hide it. But anyways, bar five, traders buying back shorts. That's probably causing bar five. This is just a trading range. I wouldn't really do anything here. Bar six, a low one, but we might get a second leg from 3 and 4. But I think there'll be buyers at the close of 4, since any bear who sold down here is disappointed in this, and they're going to scale in. They're doing the same thing the bulls are. They're scaling in, knowing that it doesn't matter what they do, they're going to be able to get out. Look, even if you sold the close of 37 and you just really you really screwed up if you did that and you held all the way. But if you did that and you kept scaling in and held, you ended up getting all the way back to your entry price. Not even quite on 70. If you're really stubborn, you could have held through this too and you would have gotten out. You could have even basically sold, you could have sold the very low tick of the day. You could have been the guy who, someone shorted down here. You had to have a seller down here to have a buyer. So somebody sold all the way down here, some bear, and they theoretically could have scaled in all the way up and they still would have made money. So that's the thing about trading range days is if you're sure it's a trading range day, they're much better days for limit order traders than they are for stop order traders. And so any strong looking bar basically becomes a magnet, and you can pretty much buy or sell with impunity, knowing that you're going to be able to scale in and make money. But the problem is when you end up doing that on a trend day, then you get trapped and lose all the money you made on trading range days. Anyways, 7, a big bull bar closing near its high, but it looks like a second leg trap to me. I would rather see a lot of follow through, and even if you get follow through, that'd be near the top of this channel line, so it's really not all that good. 8, a bear bar, but tails on both sides, so I don't really, you could sell 8. I think it's an okay swing sell. It's a double top with 3, maybe a triple top with 1, some sort of, I don't know, head and shoulders theoretically, but it's really not all that great. It just looks like a low 1, so I'd rather wait. You get follow through on 9, which is good, but there are probably buyers right here. So I want to see 10 also be a big bear bar, and then I'll look to sell. And you can see we got disappointment on 10. And I don't know, maybe traders sold the 50% pullback, something like that. Yeah, you can see we got basically to around the 50% pullback during 10, and traders sold. 11, a bear bar closing near its low, but, doesn't break out below the 10 low, which is disappointing. And if you're selling right here where there's going to be buyers at the 4 close, which is what happened on 12. So really not a great sell below 11. You want to see good consecutive bear bars. I didn't do anything. I bought 37. That was like the only trade I took today. I didn't take any of this. It's totally fine to, it's really hard to do, but, learning to sit is a skill. And the more you can just sit through these kind of things and just not really worry about it and just wait for the stop order trade, probably the better you're going to do. 13, so 12, a reversal up. It's a wedge, 1, 4, 12, but, let's see the follow through. You're buying, a little higher than you probably want to. It's an okay swing buy, I think, taking a chance that we try and test, maybe somewhere up here, maybe a little higher, maybe yesterday's close, and it ends up not triggering 13. Do you sell 13? No, I think this is a couple legs down, probably not going to get very good follow through, and you get bad follow through on 14. A doji bar, still a wedge, double bottom, 12, but a doji bar, really not all that good. The big bear bar closing near its low, 15. Do you sell it? I wouldn't. I think that if you're selling that, you're selling the bottom of the bear channel, this huge bear channel, and you're betting on a downside breakout of a bear channel, and those are pretty rare. You're usually going to get a trading range of some kind or a reversal up. So, I would expect a trading range here rather than a big follow through bar. That's exactly what happens on 15. You end up getting, or on 16, you get a reversal bar up. Bulls want to buy above it. It's a wedge, 1, 4, 16. But pretty tight bear channel. I think it's probably an okay buy since you're buying so far below the moving average, and you could easily get a pop here up to the moving average or at least the 15 high since it was the most recent buy climax or the most recent sell climax. But you can see bears again sell the close and it doesn't trigger. 17. Do you sell 17? Again, I probably wouldn't. I think you're selling so low at this point, it's really dangerous to do so. And you get follow through on 18, but that's not good follow through. If you're selling way down here, you want to see a big breakout. You want to see basically a giant surprise. You want, you want 18 to look probably like 9 or even better, maybe like this, and just, big follow through somewhere down here. You don't want to see a small weak follow through bar like 18. When you get that, traders start to buy back shorts on 19. And 19 is the exact problem with selling anywhere in here, is that if you're doing that, you have to find a way to get out somewhere down here, because if you wait all the way and get out above 20, it's erased all of your profits. Even if you took a good, one of the higher sells like 9, you still made almost nothing if you got it above 20. So that's kind of the problem with these trades, is once traders start to exit, everyone knows that it's not that good down here. And so the moment people start to think the move down is over, everyone panics out, and that causes a big bar 20. And, it keeps growing. And, I remember, I used to think about this a lot when let's say I would be short and it would start to grow, and I would only, I was afraid that I would only want to exit above a bull bar, and I would just keep hoping, just please stop growing, please stop growing, please stop growing. And anytime you think, please stop growing, it's probably going to keep growing, because it's a trading range day, and all of the things that you don't want the market to do, it's going to do. 20, a bear bar closing near its low, but not really a great sell. Probably buyers at the 18 high, scaling in higher, or buyers at the 18 high since bears sold above it and they're scaling in higher. 21, a bull bar, but a big tail on the top, tail at the moving average. Traders are selling the moving average, but I wouldn't really want to sell. What are you trying to accomplish if you're looking for something to sell over here? You're probably not going much lower. 22, an inside bar, but it's a high one buy for the bulls, but really not that good. 23, a bull bar closing, below the moving average, so really not that great. Some sort of low 2, or I guess it's technically a low 1 for the bears. We're in a bull micro channel, so 1, 2, 3, 4, 5, 6. We're in a 7 bar bull micro channel, and a pretty tight channel overall. So the first reversal down was likely to be minor. 24 follow through for the bulls, but we're reaching that 12 high, which is going to be an area where bulls are going to sell, and the most recent sell climax high, 13. So hard to want to buy. It's also the first close above the moving average today, so it's really not that good. 25 is important in that it closed fully above the moving average, but I wanted to see a much bigger follow through bar. And instead, we got kind of this mediocre bar 25, but it closed all the way above the moving average. So at this point, you should be looking for, hoping for a deep pullback. We got lucky this time, I think. A lot of times it won't give you the very deep pullback, and it'll just start to rally, and you kind of just got to, suck it up and get in. But today we got lucky, and it pulled all the way back. 25, a bull bar closing above the moving average, like I said, and then 26, big outside down, surprise bar. Probably good enough for a second leg. The first reversal up might fail, but the channel up from 19 to 25 is pretty tight, so that might get a second leg. Inside bar 27, but I wouldn't sell below it. It's a low one short, not really that good. Doji bar 28, 29, tight trading range. I don't want to buy or sell in here. It's just a tight trading range. 30, even if 30 closed on its high, maybe it's an okay swing buy, but you're buying the top of a 3-bar tight trading range when, and an outside bar, which is in and of itself a trading range. So none of this is really all that great. 31, a big reversal down. It's a double top, lower high, but you're selling low in a tight trading range, and you're going to get bad follow through in tight trading ranges like you do on 32. Basically a doji bar on 33, not quite. It's a bear bar, but big tails on both sides, so it's going to function the same. And then we got 3 consecutive doji bars, 34, 35, 36. So I don't want to do anything in here. From 27 to 36, that's 9 bars. We got like 7 dojis, or 6 or 7 dojis. So it's really not, it's not good stop order trading. I would just be flat. And then you get a big surprise down on 37. And there's a lot of problems with 37. One of them being the 18 close. Bears who sold down here are going to be disappointed, and they're going to try and get out. So there's going to be buyers at the 18 close. And again, we're probably not going that much lower because it's a bear channel. So if you're selling 37, you're hoping we're going to get a big climactic breakout to the downside, and it's probably not going to happen. And then you get the reversal up on 38, and that's, a wedge, lower low, major trend reversal, good swing buy. And you end up getting good follow through 39. More follow through for the bulls on 40, probably some profit taking above the trading range. So basically the 26 high, you could argue that 19 and 38 was a double bottom, a lower low double bottom. So we might have to get a higher low. We didn't this time, but a lot of times you might have to get a higher low there, and we got to break out above the neckline. So probably some profit taking there, which is what happened on 41. An inside bar 42, a potential 1-bar final flag, but I don't think that's really worth exiting over. It's totally fine to stay long. You can see bulls bought a 50% pullback to bar 42. They weren't as confident to just buy directly above it. 43, another bull bar closing near its high. Good for the bulls. More follow through on 44, but a tail. And outside up 45. I think it's difficult to stay long up here. I thought we were probably getting to the 7 close, which we did during 46. But I thought it was kind of difficult to stay long up here because it's starting to get sketchy. There's a big tail on 42, big tail 43, small bar 44. The bodies are shrinking. It's not the best looking breakout in the world. It looks kind of like a trading range breakout where it's not going to be as good as you want it to be. So I think it was hard to stay long because you're worried that something, basically the opposite of 19, how everyone started to exit and then just everyone exited and it bounced. Here, it can start to go down and then everyone can just quickly exit and you get a bear bar that's bigger than you want it to be. So you have to be relatively quick to get out if you're long up here. Outside up 45, a bull bar, but not all that great. It's okay to be long still, but I'd be looking to take profits soon. And some bulls do take profits up here during 46. You might, honestly, as a bull, you can probably just exit below 46 or a point below 46 maybe. You can keep a stop below 45 too. That's probably fine. It's definitely fine to keep a stop below 45, but I would probably just get out directly below 46 and look to buy again above the bull bar. 47, 48. No, sorry, 47, pullback. It's a low 2. It triggers the low 2, but not very good. 48, a bull bar closing kind of near its high, but let's see the follow through. I would rather wait and see, another good bull bar and then look to buy. I'm really not all that convinced we're going a lot higher. Follow through 49, but a big tail. And then 50, a bear bar. I thought it was a wedge, 41, 46, and 49. So potentially a second leg sideways to down. I thought we would start to go sideways here, but we ended up getting a reversal at 51. I would not sell 49. This is far too tight of a bull channel to be selling, but I thought reasonable to exit your longs below 50. Sorry, that's not 49, that's 50. I thought reasonable to exit your longs below 50, but not to sell. and the bulls can buy it back above 51. I thought it was kind of difficult to do that because it is potentially 3 legs up. But if you can buy above, and so I thought that, this might get a second leg sideways down, but you can buy above 51 and put a stop below 51 and, just hold and look to get out below bear bar. You probably didn't get twice your risk. You got close, but not quite. So not the worst thing in the world to buy above 51. I think it's definitely a reasonable buy, but it's just kind of hard to take, I thought, because we were probably entering a trading range. We were towards the top of it. But we still might have to get a breakout to the upside of the 18 bar range since we got a failed breakout to the downside. So follow through 52, 53, 54, 55. But look at these bars. Does this scream strong breakout to you? When you see a strong breakout, do you want to see a big tail on 52, a tail on 53, and then 54 basically a doji, and 55 a doji? Is that really what you want to see if you're long? No, it's not. So bulls are going to be quick to get out, and when they get a doji on 55, a lot of them just sell out at the market, and that causes basically the bear bar on 56. I think if you're a bull, you get out below 57 for sure, and just look. I wouldn't look to buy again for an hour or two. I would wait for the market to go sideways to down for a little bit before looking to buy again. You get follow through, and we're just testing sell climax highs and buy climax lows. You can see, look what this buy climax 51 through 55. We test towards the low of it during 59, 59.60 rally. We test towards the high of the 56 sell climax and the 55 close. Since it was a reasonable buy the close bar, you could have bought all the way up here, scaled in lower, and then you would have been able to get out. But anyways, follow through 58. But I think bears need a couple more strong bear bars to make us clearly always in short, and they probably need to be bigger. This is really strong, so I would be careful about selling against this. It's just too much buying pressure. We probably need to go sideways for a lot longer. 59, a high one buy, not very good. We might get back up here, but it's not worth taking. Good follow through for the bulls on 60, and then we get an II pattern, potential final flag for the bulls. It's probably theoretically a sell below 62, but it's a doji bar, and you had a lot of buying pressure earlier. So I would probably just rather wait. You get follow through for the bears on 63 and 64, but probably better to stay flat after 64. You didn't break out below the neckline. So the double top was 56 and 61, and did not break out below the neckline 59. So really not all that great. 65, you can see, why is it small, right? You're selling 64. What do you want to see? You want to see a plunge. You're hoping we get, I don't know, maybe to the swing point, the 38 high. And instead we get a doji bar. Why? Because you don't break out below the neckline. There's some overlap with 63, 64. It's not going to be all that strong. And, I assume bears sold around 50% pullback. Yep, they did, 66. So instead of selling down here, anyone who sold the close of 64, disappointed 65, just hit the flatten button. Well, I have a flatten button on my platform. I don't know what you guys have, but whatever button it is that just gets you out of all of your position. They see 64, they're disappointed 65, and they just flatten, and that causes the bounce on 66 because you can't sit through this. If you're selling 64, you need a collapse, and you don't get it. So they get out, they sell the 50% pullback. 67, a low one short, but still no breakup below the neckline. I'd rather not. 68, a wedge, yes, but you could say a big high two as well, or a wedge, 1, 2, 3. But I think that the bear channel down is too tight to be buying, and it's a doji bar and right at the moving average, not that good. You can see it trapped bulls immediately who bought above it, and we got more than a measure move down. I'm sure we got a measure move down of some kind. So down here. So basically big high two, failure, and a big breakout below, and we just basically reached the measure move down, which was in the same area as the 37 close. And we ended up, seeing traders start to buy back their shorts. And you can't sell the close of 69 and put a stop above it because if anything, there's more sellers above 69 than there are buyers. So not really a logical spot for a stop. I wouldn't buy above 71. Some people might, just betting this was a big bear trap and bears are going to get out. You get follow through 72, pullback 73, which could be the second leg from this. But instead, you get a deep pullback and then a big surprise down second leg 78. It was the end of the week, so it was possible we got a big move, but we didn't end up getting, we didn't really get anything tradable, I don't think. For stop orders, I thought you could probably sell 8, but it's a swing trade and it's really not ideal. That's not like my favorite trade. I just think if you take a trade like 8, you're probably going to take a lot of losers as well. I thought the best stop order and really the most credible one on the day was 38. You could buy the follow through 39, 40, 41, 42, 43, 44, 45, whatever, 51. And, for the most part, that's it. This wasn't a great stop order day for the most part, but if you're patient and just took the best one, then you probably did okay today. On the daily chart, I mentioned how there's a small, maybe a 30% chance we got a plunge today. And this is not that. This is bad follow through, to be honest. If you sold below this, you wanted to see the market undo the damage that March 20th and March 19th did. You wanted to see us close the gap with this high. Basically, the traders who sold above here, they're scaling in. So you want to see them be able to make money. And this is not the bar that you wanted. It's still possible that we get the plunge. But if you think we're going to get a plunge, what you're assuming is that the traders who sold here are happy with this follow through and that they're going to sell more here and other traders are going to start to get in. It can happen, but it's lower probability. So I think this is disappointing. So we might see something just disappointing for everyone early in next week, but always be aware that we could get a plunge there. On the weekly chart, a bull bar, but a tail on top. Really not all that excellent, but still by the close, but obviously very climactic. Next week is the last week of the month. Bulls would like the market to close on its high and have something, really strong for the monthly chart traders, and bears would like to put as big of a tail on this as possible. The bulls have done a really good job over the past couple months, especially this last month. So we'll see if they're able to do it. But I think for the most part, I'm really interested in next week. Is next week the last week of the month? Yeah, so next week is totally Friday is the last. So we have it's kind of rare, but you get an end of day, end of week on the 29th. So definitely be ready for a big move potentially on there. And yeah, I'll be really interested to see if the bears are able to put a big tail on that bar. And that's the